go to Diane King Hall for the earnings. Got a lot down this morning on earnings, but plenty of discussion to be had. I think some of these might be a bit of harsh reactions, but let's find out. Diane, let's start with Pinterest. We talked a little bit about it earlier. Alex's point is that they just haven't been able to get quite the diverse user base that they need. What do you see in the report?
It's true. I mean, most of their user base is women, so they don't have the diversity within the user base. In terms of the numbers, they did beat expectations. Revenue came in at $898 million. Adjusted EPS was 40 cents a share. That was better than expected. Global monthly active users rose. It totals now 537 million. That was better than expected, but that doesn't matter. They also had some weaker than expected guidance. Guidance coming in between a range. They're saying it will come in a range of 1.125 billion and 1.145 billion. Street was looking for more than 1.14 billion. So guidance is a little light. On the earnings call, CFO talked about some weakness within ad. They said, overall ad spend was strong, but they said that the overall ad spend had some weakness because of ongoing softness within the food and beverage subsector of CPG, that's consumer product groups, where advertisers continue to navigate broader industry headwinds. So they said, as expected, revenue from the third-party demand partnerships, they saw weakness there, and they expect that to continue into the fourth quarter, that weakness in that sector. So that is putting some pressure on the company this morning. And again, when you compare it to other companies within the space, other social media companies, it just doesn't have the same momentum. So you're seeing shares get hit hard this morning, off the lows, but still down more than 12%.
Okay. Yeah, kind of par for the course, if you will, for Pinterest in some ways. I guess just too, when there's so much kind of now fresh growth happening around AI and the other social media plays that just kind of continue to fall behind. I just feel like there's so many ways still that they could wring out, monetization and profit from the business. It's all about things and materialism and buying. It's like it's a shopping cart version of Instagram in like a way. So they got to connect buyers and sellers better, I feel.
It is, but TikTok has done that better. For instance, TikTok has turned into, in some ways, it's like a half shopping, half social media platform, but they've figured out how to, make that work on their platform. So you see a lot of people, participating in TikTok Shop, and you see a lot of sales. It's like kind of like a modern day QVC. Pinterest has not figured out how to do that, which is something they could really do with their type of platform. And even the challenges they talked about within the ad space, they have to figure out how to do that better, how to make the platform more shopping friendly, especially when you see one that started out as a social media platform is doing it better than them.
All right. Well, it seems like there's just so many options and that they're far behind, that they're not getting the sort of draw and advertising rates that they need to keep up. So, I mean, I don't know. Maybe maybe they need to bring someone over from one of these other businesses. I don't know, because it seems like it's been a long time just kind of like spinning their wheels, right? I mean, this is like decades going on now for Pinterest. All right, let's talk Trade Desk. I think a little bit more of a surprise to some extent. Down pretty big. Huge run, though, behind it. And also a pretty expensive stock, too. But a little bit of, I guess, questions about the guidance. I mean, the trailing seemed okay.
Yeah, it wasn't so much the metrics. I had a conversation with KG about this, and he views this as a buy the rumor, sell the news, especially when you talked about where the stock or how much the stock has run up year to date before the latest results. So they did beat expectations on both the top and bottom line. Trade Desk revenue coming in at $628 million. Street was looking for around $619.9 million, just 619, a little more than that. Adjusted EPS came in 41 cents a share. That was also better than expected. The guidance, they're projecting a revenue growth that will come in at least $756 million. That's their guidance they gave. There were estimates that were a little more than that, so it's a little soft on guidance. But again, it doesn't mean that we should kind of throw the baby out with the bathwater in terms of their results. Now, the stock is taking a sharp hit this morning, down about 10%. The company said on their earnings call, in terms of the geographic composition, North America accounts for more than 80% of their business, but they have seen growth in international, and that has been growing quarter over quarter. International accounted for about 12%. They were happy with the ad spend that they've seen outside of North America. They say that that is growing at a faster rate. There was a question asked on the earnings call about the regulatory pressure on Google and how that would affect Trade Desk. As we know, Trade Desk has been seen as a disruptor in this space. CEO said that they see it being beneficial either way it goes with regard to Google. Google / Alphabet has had some pushback, obviously, from the Justice Department and had a little bit of a loss when you consider there, but it's been at a standstill recently. But they think that Google will have to pull back from some of that business any way it goes, because it's just not, the margins aren't there for Google, so they see themselves being a beneficiary in this space. Okay.
Pretty amazing that they're still sitting at like 25% revenue growth. It's just been consistent there. So not a lot of comparable businesses right now that are just, even some of the, we hear all about these software companies and AI and stuff, and a lot of those that are making pivots are trying to balance with like a legacy business that's dragging, just kind of speaking in the terms of software. Obviously, if there's a handful of semiconductor businesses that are booming with growth, but they're also like fairly novel things that have kicked in the last couple quarters. This is like year after year. Trade Desk just keeps putting out 25%, like a minimum bar growth. So, I mean, even if maybe there's some hiccups here and there, clearly they're in the right place, still right time. Aristonet getting hit too. Diane, give me that real quick, because I do want to talk RIVN as well.
So Aristonet, part of that has to do with what their gross margins look like, but in terms of their numbers, adjusted EPS came in at $2.40 a share. That was actually a beat. Revenue came in at $1.81 billion. That was a little better than expected, but gross margins declined to 64.2%. That's down from the previous quarter. And then in terms of what their guidance is on gross margin for the fourth quarter, they're guiding for that to come in a range of between 63 and 64%, so that's a little weak for Arista Network. So you're seeing the stock get hit right now. It's down a little more than 6%, around 6.25% right now.
All right. Arista, a little lower, not exactly the best estimates, but maybe the market too just got ahead of itself a bit, because again, good growth. So some of these bars may be high. The irony is RIVN's the one that's up.
I know. And I mean, it's just, they just threw in everything here. I mean, a loss adjusted on an adjusted basis coming in at 99 cents a share. That was worse than expected. Revenue coming in at $874 million. Also worse than expected. They had come into this report talking about the supply chain issues, and they had already reduced their delivery forecast. So they delivered, basically what they said when they reduced their forecast, a little more than 10,000 vehicles. That is down from more than 13,000 in the second quarter. In the second quarter, they delivered 13,790 vehicles. But what the street may be paying more attention to in terms of the fourth quarter, the company said that they expect to reach a, quote, modest gross profit in the fourth quarter, and analysts said that's what the street seems to be paying attention to more than what we're seeing. I mean, they're going to have to nail that, because RIVN has had a really, really difficult time quarter after quarter, and even coming into the quarter. And then there are obviously concerns about what the road ahead looks like for RIVN and other EV makers, given the outcome of the presidential election.
All right. Yeah, true. That's interesting as well. The idea that maybe Tesla will get an extra leg up if the credits go away, but it just seems like a lot of pieces that still have to fall into place for that theory to have a big impact. All right, thanks, Dan. Appreciate it. Good stuff for taking us through the earnings. Busy morning down there at the NYSE.